Hey, what's up? It's Ben here. When you start to transition yourself to options trading, it could get a little bit frustrating at first because there's a bit of a learning curve and a couple of barriers to entry. But it's not like a big deal because like everything else in life, it takes some time to practice and learn. I'll walk through the process so you can understand. So today I'm going to go over what you'll need to get started beforehand to trade options, and specifically it's going to be on the Webull platform, and then break down how to trade an option on the screen. And again, this is not financial advice, and the stocks you're about to see is just for demonstration purposes. You should trade on a stock that you feel comfortable with and that after you finish doing your due diligence with. But anyways, first things first, sign up for a Webull account if you haven't done so you could get a couple of free stocks that could be value up to $2,300. They run their promotions randomly from time to time. Links are down below if you haven't signed up yet. Once you've signed up and funded your account, go ahead and download the desktop app, since that's what I'll be using, and you can use the web version or the mobile version if you like, but it's up to you. But once that's said, it's time to get approved for options trading. Now, there are different levels for options. There are levels 1 to 5, and currently Webull only offers level 1, 2, and 3. The higher level you go up, the more strategies you can use to trade options with. And here's a brief overview of what I meant. And the strategies you see on there will take time to learn. I'll also link all my videos in the description to show you how I got approved for options. And if you get stuck, you can always comment down below and I'll do my best to get back to you. Now, depending on your risk level and how much money you have, there's different ways to go about it to get approved. Notice on the chart, you see a cash and margin section. If I have less than $25,000, I would have my Webull account set up as a cash account, not a margin account. The reason why is because I would want to avoid being flagged as a pattern day trader, because sometimes you just want to do multiple trades in a day without being on margin. If you have been following me, I've explained how to avoid violations when trading with small accounts. I'll link that in the description if you want to check that out as well. But if you have more than $25,000, you can sign up for a margin account if you like. You don't have to use the margin if you don't want to use it. It's just there to help you out to trade options with more strategy and to get to level 3 and just do multiple day trades if you like. And that's just depends on the person. Once you get approved, hopefully at a level 2 options trading. If not, then level 1 will do, but mainly everyone wants level 2 because they can do so much more with it. And if you get approved for level 2 on your first try, then you're golden. I got some quick tips in the video to get you there. And by the way, from the time you start to sign up and get approved for options trading, this will probably take a week. It just depends on the deposit. The deposit takes a little bit longer to hit your accounts. So once you're funded and got approved for level 2 options trading, I'm just assuming, let's jump onto the desktop app and see how to get a trade in. So once you log into your Webull desktop app, this is what you're gonna see. Well, not exactly like this setup, but you could customize it to your liking any way you like. So in order to get to this screen, click on the stocks icon right over here, and then it'll be showing, you'll be taken to a chart right over here, and you'll see a chart. And then to customize everything on here, just click on this little icon right over here on the top, click on it, add a widget, all widgets, and then you'll see everything that's on here. So I'm gonna just close this out. And in order to get to the options, click on the options tab. This is already preset. Anything could be customizable, but from the start, you will see something similar to this. So once I click on options, right, it'll bring up this options chain. So what you're gonna see is if I go ahead and expand this, these are the dates, by the way. This is the 2-day expiration, 9-day, 16-day, and 23-day expiration. The dates will be in the center right over here, and these are gonna be the expiration dates, actual expiration date. So January 14th right over here will be a 16-day expiration right over here. So if I click that, you'll see all these oops, let me just go back here. It's taking some time to load. So you'll see all these numbers right over here. I'll explain it to you later on what it means. Basically, you have calls and puts. So the whole premise of options is that there's calls you can buy, there's puts you can buy or sell, whatever you want to do. So basic call is that you're betting that option is the price of the stock is going up, and puts, you're betting the stock price going down. So you see this arrow is just pointing upwards and put is pointing downwards. So if you think something is bullish or you have a strong conviction of a stock, then bet on it going up. And then if you think it's going to go down, bet on buying some puts, and then you'll make money that way. So that's the whole premise of the options, and obviously using leverage for it. So I'm going to minimize this. So this might be a little confusing. When you first start off, you'll notice that there's these prices right over here. By the way, these are strike prices. So basically something like a target price. So right now, AT&T is trading at $24.67. So there's strike price that's 24.5, 24, 20, 23.5. And by the way, when you first log in, I think that it's going to be inverse of this. So it's going to be at a ascending. Let's see. Right now I have this ascending, but if you click on this to descending, it'll switch it back and forth. So basically the numbers will start going up higher when you go down. And I like my charts to look like this when it's ascending, so numbers going up. So right now I'm just gonna not use both because that's a little bit complicated. So just click on focus on calls only. So I'm gonna do a trade on a call and then a trade on a put later on. So one of the calls, so I'm gonna just minimize this. So by the way, so once you reach here, you could change the strike. So sometimes you don't see a lot of, let me just go back here. Sometimes you don't, oops, it's gonna take some time to load. Okay, here we go. Sometimes you don't see a lot of strikes depending on how you have it set up. So just click on here, and for the strikes, you'll see 6. If you want to view 6 at a time, 10, and then 20 and so forth. So that's how you get to see all of these strikes. And by the way, this is what I'm talking about when I said that there was going to be multiple strategies into play if you get higher levels. So there's a single. So most likely you're going to use single depending on how you're going to play. And these are all the really, it gets a little bit complicated when you go to these, vertical, butterfly, condor, and stuff like that. So you can study up on that on your own time. I'm pretty sure YouTube has a lot of these strategies in play. You could just Google it or YouTube it. But I'm going to just do the single option because most likely everybody starts off doing single options first. So that's for the strategy, and then this is for the number of strikes you want to see, and then there's the calls and puts right over here. So depending on how you want to play your options, you could do something that's short term or something that's a little bit longer, over a year, which are called leaps. So for this example, I'm going to do something that's short term just because it's going to be a little bit cheaper to play. So I'm going to be looking at expiration that's 9 days out, and it's going to expire in January 7th, 2022. So once I click on this, it'll expand, and then if I refresh this, it'll have all these numbers right over here. So on the left side, you'll see the strike price, which basically are the target price. And then you'll see, these bids, ask. I'll go through that right now. So currently right now, AT&T is trading at $24.65, right? So the bid price is basically what the buyers are willing to buy the options at, and the ask price is what the sellers are willing to sell it at. So the last price is basically the last price of the option. Mid is the middle price of the bid and ask. And then percent changes right there imply volatility, how volatile the stock is. So right now, AT&T stock is not that volatile. It's pretty decent on like around 22%. Anything that, you could get crazy stock volatility at like 100%. So the higher the volatility is, the better the reward. So it's just basically high risk, high reward type of thing. Open interest, usually there's a volume next to it, but I don't know what happened to that. So the higher the volume is, the more interest there is. It's easier for you to get in and out of a trade. And then delta, I'm not going to get too technical with the Greeks, but basically delta, you could think of it as a probability of you winning this option, or actually making money from this option. So there's like, if you look at this option right over here, you have a 54% chance, 74% chance. The lower you go on here, basically your higher probability of making money on this trade. And for delta is basically you can think of it as the amount it takes to play this option. So if you look at this, this 0.014, maybe about $1 or so a day to just play this option. And if you go down a little bit, you go further down into the option where the strike is like 20, right? It doesn't take a lot of money because to play this, because that you're in the safe zone, because the likelihood of AT&T dropping to $20 a share is pretty slim. So that's why everything is played out on how it is. So obviously if you go higher, the probability of playing, having a strike having your target price to be 30 or having AT&T stock to reach 30 is pretty, slim. That's why there's not a lot of people training it. And plus, if you play something like this, it's going to be really relatively cheap, obviously, to like, to a penny or so. And then obviously on the strike, that's, 20, it's going to cost more to play something that's in the money. So hopefully that's, you get an idea of this. If not, just drop a comment down below. And then there's the break-even point where, what the stock price has to hit in order for you to break even. And that's pretty much it, covers that. And then I'm going to just go ahead and show you a trade. Basically, I'm going to buy an option. So I'm going to click on a 24 strike, $24.50 strike. So once I click on that, everything changes on this side. You notice that it's going to cost roughly about 38 cents to play. They typically use the mid price, I believe, for this number. So right now the trade is AT&T at a $24.50 strike, and it's going to expire in 9 days, which is January 7th. So I'm going to be buying one option. So I could do an order type, market order, which will execute almost immediately, whatever the market is willing to pay. Typically, I would say around this price. And then limit is more control of how much you're willing to pay for an option like this. So right now, if I set this price at 0.39, which is basically $39, it will execute immediately almost, because right now the sellers are willing to sell at 0.39. But if I change it below to 0.30, let's say 0.35, right, I know if I place an order, it's not going to execute. So I'm going to just demonstrate to you now that if I place an order right over here, you just read everything, it's just a confirmation that everything looks right, and just buy, and it's just going to be in the queue. So right now it's just working, and I have this on a buy right over here. I'll just expand it out right over here. So it didn't even go through. Order status is working, so it didn't go through, like I said. So I'm going to just cancel this order. So right now, you know that anything that you're gonna buy, you wanted to buy something at below this bid price, it's not gonna go through for sure. Anything in between that or higher than the ask price, it's gonna go through. So then when you cancel it, we will issue a request to exchange to cancel the order. It is the blah blah blah, not here. Okay, so click on OK, and then yeah, it just got canceled. So that order got canceled. Now, if I really wanted to execute, put it at 0.39. Sometimes they'll execute on the mid price 0.38, but it just depends on how lucky you get on that, I guess. So 0.39, I just want this to get execute so you understand how this entire order system works. So 0.39, and then I just place my order, because right now it's trading at 0.39, and then so you see this estimated premium debit, which is $39. So that's debit is going, your money is leaving your accounts. So, and if you receive a credit, basically money is coming into your accounts. So break even point, like I said earlier, is what it takes for you to break even. And then max loss is $39 that you're going to lose, but you have unlimited profits. So basically, if this AT&T stock decides to, shoot up like crazy and maybe $40 a share or so, then you make whatever you get on this side, but your max loss is $39, so you're capping that. And then there's a little description when it's going to expire and blah blah blah. So if you do end up holding the contract to expiration, then like I said again, or like this says, you have the right to buy 100 shares. So make sure you have the money ready for that. Usually if you don't want you to hold the contract until expiration, then exit the position out, and I'll show you how to do it. So right now I'm gonna hit buy, and it went through. So notice that right over here, the working, there's no order place, right? If I click on fill right over here, you'll notice that T right here, $24.50, it got filled at a average price of $39 or 39 cents right over here. So, and then right now that's filled. So if we just wait it out, maybe a day or two, the price is gonna definitely fluctuate. But since AT&T is a low volatility stock, it's not gonna do much. I'm not even making. I think I'm gonna lose, a couple $1 or so off of this trade if I were to go back and sell this. So how do you sell a stock like this? So once you have it in your hand, you want, maybe you don't want it to wait until expiration. You don't want to hold a contract. You don't want to buy the 100 share, yada yada. You don't want it just to hold it. Sometimes people just, close out the position and just sell it just so they could collect the money up front that they got if the stock price decides to shoot up. So now let's say, 5 days or so have gone by, and you made some good money, let's say. So but in this case, 5 days hasn't really actually gone by, and I'm still holding this, right? So I'm looking at this right now, and let's see, where is my order? Now I'm going to just click on positions right over here, and then I'm going to expand this out so then you can actually see this a little bit better. So right now I have a quantity of 1. So basically the one that I bought it with, $24.50 strike right over here, and market value, right now is $38, and unrealized profit and loss is -$1. Basically I'm losing money on this trade because I bought it just a couple seconds or minutes ago. And then unrealized profit and percentage, profits and loss percentage is right over here. So I'm basically losing money on this trade. So if I were to, if AT&T decides to, drop down like crazy, to let's say $23 or something like that, and I don't want to lose any more money, and I don't want to risk it, just to hold on to this, and it's not even worth it at this time. So let's say you want to close out your position, whether it's for a gain or loss. This is what you're gonna do. Just click on it. You put a sell right over here. So right now you have 20. It's 24. Make sure you have the right strike actually, because sometimes you have multiple options going on or multiple contracts going on, and you're not too sure of which one's which, and sometimes you sell something that's not. So AT&T right now, T ticker, strike price $24.50. Expiration date is clear right now. I'm gonna sell 1 contract or quantity 1 option right over here. I'm gonna use a limit order. So actually, let me show you a market order, because once you sell market, it's almost immediately that's going to execute. So right now, my maximum loss, you don't have to care about that, because you have 1 contract right now in place for this strike. So maximum profits is $37, and so technically it's the market price. So it just depends on what the market is willing to what do you get for the market price. So I'm gonna place an order just to show you how the market price works. So I'm losing money on this trade for sure. So place an order, and it says estimated is about like $37 back. So this is getting the money back. So I'm gonna put sell, and it went through. So my position right over here, my order right over here. Where'd it go? I got the penny filled. Okay, right over here. So I have 1. Let me just shoot what I do. All right, okay, I'm just leaving that as. So I bought 1 right now, and I bought 1 earlier, and then I sold 1 right over here. So market day, and then filled, and then average price filled was 37 cents. So basically $37, right? So I bought it at $39 and then sold it at $37. So now there's a $2 difference. So basically, during that trade, I lost $2 just by doing this. So hopefully you get to understand of buying options, and then also closing out the option as well for a call option. So then now let's switch over to a put. The put is almost the same thing, just reverse. So if you want to stay in and watch this, feel free to do so, or just click out. I know this is gonna be a little bit longer video than usual. So let's find a different stock that you want to do. So I'm gonna minimize this. So on the top part right here, it's hidden, by the way, so you can't see it. It's like a search bar. So type in a ticker that you want to do again. So now I'm going to do something like Palantir, ticker symbol PLTR, Palantir right over here. I'm going to click on this one. So right now there's the option chain that open. Again, you'll see something like this, but now in this case, I'm going to buy a put. So a call is when you think you're buying a call is when you think the stock price is going to be bullish and it's going to go up, and put is when you think the stock price is going to go down further. So For a put Palantir, let's say you think that this stock or any stock that you're gonna pick is gonna go down. I'm gonna bet on it, so I'm gonna open this option chain right over here. I'm gonna refresh this real quick, and then now I have a 9-day expiration on in the same time, January 7th, 2022. That's gonna expire, and I think that Palantir is gonna go down in price. So if you think that Palantir is going to go down in price, buy an option. So right now, any of this is going to be in the money. So anything that is, above this price, $18.07, anything that's highlighted blue, I guess, is going to be in the money. And then anything below this stock price is going to be out of the money. So usually out of the money options are cheaper to play. And then anything that's in the money is going to be expensive. So I'm going to buy something that's, it's going to be, in the money. I'm going to just do a order on a put. So I'm going to be buying a put. So I'm going to buy this one right over here, click on it, and then Palantir, $18 strike right over here, and I'm be buying a put. So right now there's a put of 100 right over here. So make sure everything checks out again. Order type, it's up to you if you want to do a market order or a limit order. Limit, you have more control, and we just do one in terms of number of contracts, and then limit price. Again, if I do something like right over here at 0.46, it's going to execute. So I'm going to just go ahead and place my order again, and then review everything, have money leaving out your account. So $46, and the max loss that you could get is max loss that you're going to lose is $46, and the max profit is whatever, how far it goes down. And the only amount for the max profit is that it goes to zero. Basically, this company goes bankrupt and goes to zero, and that's the max profit. And then the break-even point is right over here. So then it says you are buying the right to sell 100 shares of Palantir for $18 per share by January 7th, 2022. If Palantir shares are higher than $17.54 on January 7th, 2022, this option will expire worthless. So just take a note of that. If this option goes out of that price, it's gonna be worthless. So I'm gonna go ahead and buy, and it went through. So if I go on the field, or actually work, so it's not in the work, so I'll go field, refresh this Palantir. I bought it at right over here, buy, last price, limit, the limit price is $46 right over here. And then now let's, if you just wait it out, let's say everything goes good and accordingly, you're making money, you're not making money, depending on how you want to play, and you decide to close it out, right? So you just go back, click on the stock, make sure that everything's on here. You see your Palantir, strike price with 18, expiration date is right. And once everything is right on this, click on sell. And selling is basically, the same thing as, the other one that I did for a call option. So market price, if you want limit price, I'm going to just do a limit right now. And I'm going to just put, let's say 0.45. So I'm going to just choose that. And then, time and force, you could do day or good till cancel. I didn't talk about that earlier, but it's always up to you. Day, good to cancel. Sometimes you want to do days because you just think what the stock price is gonna, you predict that the stock price is gonna hit at a certain level. So you just do day. Good to cancel is that you just basically don't care, as long as it executes. So I'm gonna just choose day, and then place order. Maximum profits is $45 in this case. So let me just review back. Let's just put 46. I don't want to lose money on this trade. So place order, hopefully it gets filled, and then hit sell. And then right over here and working, it's going to be in the queue. And if for some reason it doesn't get filled, you can obviously modify the order and change this, and then just put the price down to 0.45, and then modify order, and then just hit sell, and then it got filled. So right now I bought this right over here. Let me just, I don't know why it does this. Okay, yeah. So I bought a put option at 46, and then sold the put option at 0.45. So basically I lost $1 on this trade. So overall, I just lost money trying to do a demonstration for you guys. Hopefully by now you have a good idea of how to execute an option, buying and selling a call option, or buying and selling a put option. If not, feel free to reach out to me and I'll do my best to reply back in the comment section. And if you like this video, feel free to give it a like and maybe consider subscribing for more weekly uploads like these. And I'll catch y'all later.